What's up, everyone? It's Scotty with Money Vesting. Welcome on board for another Market Open live stream. Just want to make sure that the audio and the video is working well. So give me a thumbs up if you guys can see me and hear me. We've got a lot to cover, a lot to talk about. And everybody, good morning. Thank you so much for joining here. We got the QQQ ETF down just about 1%. We are recovering quite a bit because we did gap down quite heavily. The futures at one point were down over 2.5%, close to 3%, and right now we're starting to see a little bit of a recovery back higher. The SPY is still down over 1.27%, but similar to the Nasdaq, is seeing a little bit of recovery here back higher, and the Dow Jones is also down a little bit over 1% as well. So perfect. Welcome everybody on board. Thank you so much for joining. Make sure that you do drop a like so it helps out the channel, kind of push this stream out to other people if they want to join as well. And we got the volatility higher, a little bit over 15% in the green right now. Just under 32 levels, as there has been a lot of uncertainty related to the geopolitical tensions, of course, with Russia's invasion of Ukraine. And on top of that, we've got inflation and interest rates to deal with here very, very soon when we have the FOMC meeting. And Jerome Powell is also going to be testifying later this week, which adds to more uncertainty and more volatility in the market. So we're going to find out how this week goes. And today is the last trading day for February 2022 as well. And then we enter March fresh tomorrow. The yields here down a little bit under 1.9%. We're still seeing this flight to quality environment where people or investors in general are moving away from equities over to safer bonds and safer consumer defensive stocks. And speaking of defensive stocks, defensive names such as Lockheed Martin, Raytheon, and some of those other sort of stocks or companies that provide a lot of defense equipment and infrastructure, and a lot of sort of jets and fighter planes and whatnot have been doing really well pre-market, which I will go over here in just a minute. And oil prices still up. So WTI crude just over $95 a barrel, up a little bit over 3.5%. With Brent was coming down. So if you come over to commodities, so Brent here just under $98 per barrel, so slightly down about 0.5%. So that is probably the first time we're seeing a little bit of a difference here in crude and Brent prices. And then finally, Ethereum just under 2630, up a little bit over 41 basis points, and Bitcoin also pushing up over 1%. And Timothy, yes, I am back home. Just got back in last night, so yeah, feel good, and now we can do some polls, we can do some more analysis as well. So this right here is going to be the earnings for this week. So we did have Berkshire Hathaway report already over the weekend, and I did post an Excel spreadsheet and a PDF available for everyone to download, for all of our Patreon members to download if you want to get access to Berkshire Hathaway's and Warren Buffett's portfolio, his holdings, his percentage allocation, his cost basis, his percentage gains. All that stuff is going to be included in that downloadable PDF. So that's going to be the link down in the description below if you want to join and of course get access to all that information. But later today, after the bell, we've got Zoom, we've got Novavax, Blink Charging, Workday, PubMatic, HP, 3 Systems, and Smile Direct Club. So a lot of companies, including Lucid, also reporting their numbers. And of course, later this week, we've got a bunch of retail names, including Sea Limited, SoFi, AMC is going to be reporting, PowerPlug, we got Salesforce, Wish Technologies, we got Domino's. And then, of course, we got Okta, C3AI, ChargePoint, Snowflake, PaySafe, Costco, and the list goes on and on. So it should be a very, very exciting week, especially for earnings. This is the economic calendar. U.S. President Biden speaks tomorrow. This is tentative. Again, Tuesday, March 1st is when he's expected to speak. There has been a lot of sanctions on Russia and Russian banks already, which we'll go over here in just a minute. And this right here is the OPEC meeting on Wednesday, March 2nd. And of course, crude oil inventories as well. And the FOMC member, James Bullard, speaks once again. That should be very, very important on top of the ADP non-farm payrolls employment change, right? So that's going to be the actual unemployment numbers, the employment report that also comes out, and the beige book all comes out between 5 a.m. all the way till 1 p.m. Eastern. And then on Thursday, March 3rd, we do have Jerome Powell speaking sometime. Is it going to be? Yep, so right there. So we got Fed Chair Powell testifying at 10 a.m. Eastern, which is going to be super important. I hope you guys can see that. Let me just zoom in a little bit. So that's going to be that at 10 a.m. Eastern. That's going to be on Thursday, March 3rd. So make sure that you put that on your calendar. If you have time, we'll probably do a live stream going over exactly what he has to say as well. And of course, we've got the initial jobless claims, non-farm productivity reports, and then the first Friday of the month, which is going to be March 4th. Friday, March 4th, we've got the actual non-farm payrolls, the unemployment numbers, the unemployment rate, the participation rate, the average hourly earnings, the work week, all that stuff comes out later this week. So this is a very, very important, exciting week. And not to mention that Russia and Ukraine are actually having talks right now to see if they can actually achieve any type of a resolution in Belarus-Russian border. So we'll see if that actually happens or not. So Biden administration here expands sanctions against Russia, cutting off U.S. transactions with central banks. So the Biden administration announced additional sanctions against Russia's central bank on Monday, a move that effectively prohibits Americans from doing any businesses with the bank, as well as freezes assets within the U.S. And then a senior Biden administration official who spoke on the condition of anonymity in order to share Washington's thinking said the new sanctions will take effect immediately. And we wanted to put these sanctions in place before our markets open, because what we learned over the course of the weekend from our allies and partners was the Russian central bank was attempting to move assets, and there would be a great deal of assets flight starting on Monday morning from institutions around the world. So today, basically, a lot of money and capital will be flowing internationally, and Russia central banks is obviously being excluded from the SWIFT banking system as well. Our strategy, to put it simply, is to make sure that the Russian economy goes backward as long as President Putin decides to go forward with his invasion of Ukraine, and the U.S. is also adding Kirill Dmitriev, another ally of Russian President Putin, to the sanctions list, as well as the direct investment fund Dmitriev heads. And the official said the U.S. expects its allies to take similar steps in the coming days. So these are, very, very stringent sanctions, obviously in place to kind of disconnect Russian economy from the rest of the world, and no country is sanction proof. And Putin's war chest $630 billion in reserves only matters if he can use it to defend its currency. And we learned earlier that ruble against the US dollar fell to its lowest point, to its all-time low, dropping over 20% on Monday as well. And that is the largest single-day drop in the value of Moscow's currency ever to be recorded. The Bank of Russia, the nation's central bank, stepped in to stanch the ruble swoon by more than doubling the country's benchmark interest rate to 20%. So the banks now are going to be paying 20%, up from 9.5%. And the hike in interest rate is designed to tempt savers to keep cash in the Russian banks, since the West and its allies have moved to Moscow's biggest lenders off from international markets. So that increase in interest rates is just an attempt from Moscow to make sure that savers and people and citizens of Russia, and even internationally, are keeping their money in sort of like Russian banks to earn that 20%. And of course, Moscow's inclusion from SWIFT, which stands for the Society for Worldwide Interbank Financial Telecommunications, which is a way for the banks to communicate with each other securely, means that Russian banks won't be able to communicate securely with banks beyond its borders. And Iran was removed from the SWIFT in 2014 following developments to the nuclear program that they have that was started years ago. And the leaders of European Commission, France, Germany, Italy, and the UK, Canada, and US plan to limit the sale of so-called golden passports as well. So there's a lot that's going on, right? In terms of sanctions, there's just so much that's happening. And Ukraine and Russia began talks as fighting rages on. And the economic fallout of Russia came as fighting in Ukraine showed no signs abating, and following Russian President Putin putting nuclear forces put on high alert. And Ukraine began talks near Belarus's border Monday with Russia in hopes of reaching a ceasefire, while Ukraine sent its defense minister in other top officials. Russia's delegation was led by Putin's advisor on culture. So we'll see if there's any resolution that comes out. But now shifting kind of gears over to the markets. Again, I don't want to go into too much politics, but just kind of giving you guys an update on what's happening. There have been a lot of developments over the last couple of days. And obviously the Russian economy, the markets itself, and the currency have taken a big hit as there has been sanctions. But sanctions are kind of like a double-edged sword, so you can't really put sanctions on a country without having a little bit of a blowback on yourself, because that's how global trade works. Because if you're putting sanctions on, let's say, Russia, there is going to be some blowback as well, because 40% of oil is imported into Europe from Russia. So if there is any type of exclusion from SWIFT, then that really causes a lot of problems, a lot of issues for European countries if they want to make payments for those imports, which obviously is going to be a big deal going forward. So there has to be a lot of strategic planning before these sanctions are put in place. So we will continue to kind of monitor this and how this develops over time. But Morgan Stanley downgrades Foot Locker to underweight. So I actually did a video on Foot Locker as well. You guys are more than welcome to check that out. I laid out some pros and cons for the company. And then we got Jefferies initiating coverage of GoPro as a buy. We got UBS downgrading AbbVie to neutral from a buy rating. Bernstein raises price target on Tesla to $450 from $300. So we're starting to turn some of the infamous bears of Tesla somewhat into bulls. So again, $450 is still way lower than where Tesla's trading right now, but that's still a decent upgrade of $150 per share from Bernstein. BMO upgrades Dollar Tree to outperform for market perform. We got JP Morgan reiterating Target as overweight. Then we got BMO upgrading Block to outperform for market perform as well. I did a video on Block as well. And of course, another video kind of going over the comparisons between Coinbase, PayPal, and Square. So make sure that you do check out those videos as well. And then Bank of America reiterates Best Buy as a buy. JP Morgan reiterates Apple as overweight. And then Bank of America reiterates Starbucks as a buy. Morgan Stanley reiterating Salesforce as overweight, and then Bank of America reiterating Exxon and Chevron as a buy. And then finally, we got Wolf upgrading Lockheed Martin to outperform from peer perform. And Lockheed Martin, Raytheon Technologies, as I mentioned earlier, are some of the defense names that are doing really, really well pre-market. So going back over to the markets here, we've got the QQQ now under 1% in the red. So definitely seeing a little momentum to the upside. SPY is down about 1.2%. And the Dow Jones is still down about 1%. Let's take a look at Lockheed Martin. So this stock up a little bit over 1.84. By the way, this thing was up well over 4% here when the markets opened up. And you'll notice that we were trading as high as $433. And since then, it has dropped over 3.6%. Same thing with Raytheon Technologies, RTX. It's only up 3.7%. At one point, it was up to 104. And we have pulled back over 2.6%. And not to mention that L3 Harris, another government contractor, LHX, is up over 2.78%. So there are some defense stocks, some of the government contractors that are doing really well right now in this environment where we have so much geopolitical tensions. So, all right, let's just take a look at the portfolio from Warren Buffett. Again, I've actually shared this with everyone. You guys are more than welcome to check that out. But these are going to be some of his top holdings as of the fourth quarter 2021. So this is as of December of 2021. Of course, the market value is sitting at well over $350 billion. That's a lot. And of course, the cost is at $104 billion. That's a nice 235% gain overall for Warren Buffett and Berkshire Hathaway and his peers. But you'll notice that Apple, 907 million shares is what he owns. Cost basis at $34. And that's a gain of over 418%, 46% allocation. So almost half the portfolio right now is made up of Apple stock. So this is obviously grown by a lot because earlier you'll notice if you were to take a look at the cost basis versus how much he actually invested in the company, we're looking at 30%, right? So roughly 30% was the original allocation, the percentage allocation for Warren Buffett in Apple. And since then, since the stock has outperformed and has grown so much, it is now sitting at 46%. So that's still a very, very strong performance and a big allocation for Buffett. And coming in second, at a close second, we've got Bank of America with over 1 billion shares, cost basis of $14. 13% of the allocation is up at well over 214% right now on that trade. And then the third are going to be others, which we obviously don't know. Going to be a lot of insurance companies. I don't have a breakdown for those. That's going to be 11%. But then, of course, a lot of 7%, a couple 7% stocks here is Coca-Cola and American Express, two of his biggest investments as well. Coca-Cola more so because, he's got 400 million shares at a cost basis of $3. So he's almost 30x, or actually 20x investment return on Coca-Cola. So very, very nice gain on that. So over a 1,700% return and 1,800% return on American Express at over 151 million. But just wanted to kind of go over this and, kind of share this with you guys. Again, the entire list is available for you to download as a PDF in our links down below. So, all right. Thank you so much for joining, everyone. Ranjit, welcome on board. Jonathan, thanks for joining. Let's take a look at Palantir and let's see how that stock is doing right now. Up a little bit over 1.3%. So going up to 1163. I do think that Palantir, just based on the fundamentals and just based on what the earnings were, I think it's now trading at a reasonable valuation just given the price of sales because we don't have a PE multiple. We have a price of free cash flow, which is high. But again, the company's got a big stock-based comp to kind of adjust for right now, and that is also coming down as the company is progressing and becoming more and more mature over time. Still in that high growth phase, but over time you'd expect and you'd see less share dilution, you'd see less stock-based comp, you'll see less insiders selling. So over time they are kind of moving in that right direction, but for now, yes, the valuation is sort of like reasonable to high right now. So yes, so current NEO is going for a secondary Hong Kong listing finally. Yep, so that's great. Market opens in about 6 minutes right now. So every little thing asking what time the market opens, in about 6 minutes we'll go over to the indices. So that's that. Palantir here, just over 1.3% right now. So Teladoc, somebody mentions up over 14%. Oof, that's a pretty big jump here for Teladoc. Let's just see what's actually going on. TradingView doesn't have anything on Teladoc right now. Let's see if we can find anything here. Teladoc. We'll just do that. Teladoc stock. See if he actually did announce anything the past hour. So, all right, right here. So Teladoc stock jumps after teaming up with Alexa, Amazon Alexa. So shares of Teladoc shot up 12.7% in pre-market trading. All right, that's the news because I might have to subscribe to MarketWatch. But they jumped after teaming up with Amazon Alexa. That's pretty cool. And how is that going to even work? I mean, I'm trying to understand how is this partnership with Amazon's Alexa going to actually work and help Teladoc? Yeah, because they're mostly like very, very tech oriented sort of health care company, right? You can connect with doctors and physicians online. But yeah, I mean, it should be interested. I mean, I'm definitely interested to learn more about this deal. But $70. Of course, it's been making lower highs and lower lows. So from all-time highs, it has absolutely gone destroyed from over $300. It's down over 80%. Right now, but yeah, it doesn't help Teladoc, helps Kathy Wood. I agree. One of our top positions right now for sure. One of our big positions. So Teladoc and Alexa has calls enabled and call doctor emergency. And Amazon has pharmacy. Okay, yeah, I could see that happen. But yeah, I mean then at that point you're just calling a doctor via Alexa. You can do it on your phone, but again, there might be something more to it. We just got to get the details of what the partnership's going to look like, and what type of features are going to be enabled between Amazon and of course Teladoc. Is Amazon moving on this news? Probably not. Amazon's like too big of a company to actually be affected by Teladoc. Yeah, so not really. So just down about 82 basis points right now. Doesn't really affect them all that much. So let's see. Google versus Microsoft in terms of financials. I do think they're both equally good. Microsoft's also has that metaverse and gaming aspect to it, and has less of a regulatory headwind in my opinion. Google's definitely got more regulatory headwind to deal with than Microsoft. So it's not so much a question of fundamentals, whose are better, whose valuation's better. It's more about whose risk is less, right? Who's got fewer risks moving forward. This is my opinion, is what I think. But I do like both of them. And if it does come down to cheaper levels and cheaper valuations, would love to kind of dollar cost average in pretty much both companies. So right now Microsoft's got a head and shoulders pattern forming. We did see like a brief breakdown below 280, but then of course the buyers were reluctant to step down. Like on Thursday, we saw like the biggest intraday change for a lot of companies as the buyers stepped in, and we saw a big rally intraday. So on the day for QQQs, we are trading below 344 again. So we'll go ahead and turn this level back into a resistance right now, because we did see a nice close above 344. And I also mentioned in our Discord, we were seeing that breakout sort of alert. But again, making sure that we are all on the same page, that just because we see like a small rally here, the overall trend is still in a downtrend, right? We're still making lower highs and lower lows. And unless, of course, after we see consistent breakouts and higher highs and higher lows, there's no signs of a proper trend reversal yet. So I want us to be on the same page here for the markets overall. And SPY 446 is going to be that next key resistance area, and support at 420. All right, so let's just do our quick poll here. Markets today. I want to hear from you guys. And what do you guys think? Red, green, and then I'm going to add flat. So let me know, and of course vote and what you guys think about the markets today, because we are starting down, and usually I do like days when we're gapping down. I do like days when we are gapping down, and the reason that is because that leaves a lot of room for the upside, for a lot of intraday sort of potential to the upside, as opposed to days when we're gapping up, because then that leaves a lot of room to the downside. Of course, usually, not always, but usually we have seen days when we gapped up, we have come back down, and we have seen that intraday selling take place right now for the market. So I like today's setup, down about close to 1%. I think that's good, and then we'll see where the markets end up today. So most people have the markets, most people leaning towards the markets being red today, at least majority of you guys. So yes, JP Morgan and Deutsche Bank and HSBC, a lot of banks are getting impacted due to war, due to potential sanctions, not so much the war, but yes, due to sanctions. So JP Morgan right now is down 2.3%. The entire XLF ETF, the financial sector, down over 2.3%, and that's because of the sanctions that are being put in place for Russian banks. And I was just reading up a little bit earlier. Again, I've mentioned this before in the live stream as well. They don't have a lot of exposure to Russian banks, but that still affects them to some extent. So that's really one of the reasons why we are seeing a big sell-off in banks today, because of the sanctions that were put in place, and of course Russia's exclusion from SWIFT happening over the weekend as well. So a lot of bank stocks are starting lower. Deutsche Bank down over 7.8%, almost 8% again, after already seeing pretty big sell-offs here earlier last week. And then Citigroup, Bank of America, some of the US banks not falling as much as some of the other ones, HSBC. So we can add that as well. Down over 6%, which seems to have a little bit more exposure to its Russian counterparts. And let's just add some Russian banks as well. We'll add the ruble here, which is down close to 15% right now. And then overall, I mean, we've got a pretty negative sort of sentiment on banks right now. So, all right, we are open. The poll is pretty much flat. We've got 30% expecting, about a third of the market expecting for the markets to be green today, 51% expecting red, and about 18% expecting the markets to be flat overall. So it's kind of neutral. I would say that's pretty neutral sentiment. Again, we're going to have to wait and see how these things develop over time, because, and now I was just thinking about it, about this myself, right? After this geopolitical tension and what we've seen with Russia's invasion of Ukraine, the interest rate and the inflation problem seems a lot smaller, right? It feels like what the markets were really dropping on the fears of interest rates and inflation when we've got bigger problems to worry about, right? So that problem seems kind of smaller, like with retrospect to what's going on right now. But yes, during later this week, and of course later in March, we've got Jerome Powell talking, we've got James Bullard once again, other FOMC members talking about as well. So that could rattle the markets once again with these fears of inflation and interest rates and whatnot. So there's a lot that's going on in the markets, and even global markets are taking a hit. We've gone over the stock heat map. We've talked about different companies and different sort of economies and how they're actually doing right now. But how high the VIX will go today, it's kind of hard to say. We're already starting to see a bit of a pullback as the NASDAQ, the S&P kind of come back intraday, but the VIX still up over 12%. So I'm really watching 35 to those 30 levels, right? Those are the two levels where we got tagged at coming in from January 24th, right? January 24th, we got down to that level before seeing a big sell-off, and then that was a time when the markets also rallied intraday, and of course over the last several weeks. All right, let's take a look at our select sector indices here. So energy down over 86 basis points, oil up over 19%, commodities, metals. Is this year to date? So let's just go to year to date. So year to date minerals, sort of commodity prices, which is your XME, is really starting to kind of narrow that gap between energy and commodities. So energy is also commodity, but if you were to look at the XME, which is going to include more of your palladium, wheat, gold, silver, all that other commodities, it is now starting to push higher. So that's that blue line. You're starting to see that push higher, and energy is starting to see a bit of a pullback here, ever since going up to 23-24% on a year-to-date basis. So how to get a stock map in trading software? So you simply go over to the very top screeners, and then you go over to the stock heat map. And that way you can kind of toggle around different sort of time frames, different markets if you want to look at it. If you were to look at the all US markets, all US stocks pretty much on the day, so you'll see a lot of green here because I think this is as of close of Friday. But all the other sectors still kind of consolidating sideways, right? So this is where the line really is, the zero line right there. Anything below this yellow line is going to be everything that's red year to date. Everything over that line is green year to date. So comments on Tesla. So Tesla got an upgrade today. Let's see how it's reacting to that upgrade. It's up over 2%. Not bad. Very, very nicely back up to $827. There's the pattern is very similar to the QQQs, right? Right now we're kind of like in this interim period where there's not going to be a lot of decisions being made as opposed to just looking as to how the markets and the economy and the talks between Ukraine and Russia kind of develop, right? You'll notice that we are overall trend is still in a downtrending pattern. So this is not bullish, right? In the short term, sure, you can see a bit of a rally back up to like 920s and 915. It's going to be a nice 24-25% jump, but overall, it's still making a lower high and a lower low pattern. That's kind of like the broader trend if you kind of zoom out. That's what you'll see for the NASDAQ. That's what you'll see for the SPY. Now these short-term intraday sort of rallies, sure, those are great. We saw one over here for Tesla. Over here when it rallied, we saw one over here at the beginning. We saw a couple small ones over here, and right now we're kind of seeing that third or fourth rally once again for Tesla, but the overall pattern is going to be this, right? We're still making these lower highs and lower lows. So the resistance really to watch for Tesla right now is $850 all the way up to $945, $950 per share. So let's just open up the 4 split screens. Saram did 100th like. Martin, thank you so much. I really appreciate that. Thank you so much for the 100th like. And by the way, you guys, make sure that you drop a like so that this stream gets pushed out to more and more people, and we can sort of have more people join in and share their perspective as well. So I've got Meta Platforms here down close to 1%. I've got Block up over 1.87%. And we got Coinbase just down about 33. And let's take a look at Amazon. Down 74%, and Apple here just down about 0.5%. So Caddy, what do you suggest buying Google before split or after? So Murich, that doesn't really affect the price. I mean, it doesn't really affect the fundamental value. Whether you buy it before or after has no significance whatsoever, right? It's the same company, you're getting the same stock, you're getting the same value that you're getting. It has no material impact on whether you buy before or after the split. Now that being said, ahead of the split, which is going to be in June, there could be a potential rally, is what we have already seen with Nvidia, Tesla, Apple, right? All these 3 companies went through some type of a share split, and we saw a significant sort of rally leading up to that share split. So just keeping that in mind, I wouldn't mind kind of adding a few shares here. I have been buying Google as well, of course, over the last several weeks and a couple months here. That's because I do like Google at this fair valuation, right? If it does come down lower at 25, 22, 2300, then sure. I mean, I would love to add more shares, but just because it's getting a split doesn't necessarily justify me buying or selling any shares, right? That's not like a thing that I would necessarily look at. And then just from a sentiment standpoint, as I pointed out, Tesla, Nvidia, and Apple, they have rallied prior to a share split, but that may or may not happen for Google, right? Just because it's happened for those 3 companies doesn't mean it's going to happen for Google. But your decision should solely be based on where the stock price is trading at, what's the valuation like, and do you like the company or not, right? Can you look at the financials and make sense of that company? Share split should be like the last of your worries in general, because it doesn't really do anything to the company. Hope that answers your question. So, all right, let's take a look. So Shiv, thank you so much for joining. I really appreciate it. Is Activision deal going through? The last time we checked, yes, it is still going through, unless there's, of course, any headlines saying otherwise. That's why you have the stock price trading pretty much flat at around $81, $82 per share, the price that Microsoft put on the stock as the buyout price is where they're actually closing the deal. So yeah, I mean, so far there's no news that this is not going through. If anything, I would assume that it is on track or on progress to closing the deal here next year. I think they're supposed to close it in 2023. So So yeah, I mean, there may not be a lot of upside going into like the next 3 quarters or so before the deal goes through for Activision Blizzard, because it's already gapped up and it's now trading flat. It's trading sideways. Now, if Microsoft were to pull out, then yes, it'll start trading on its own again. But right now, this is trading based on the pricing that Microsoft's put in place for Activision Blizzard. So that's kind of like my 2 cents there for Activision. So NASDAQ here seeing a small recovery. We're down only 70 basis points. The SPY is now under 1% in the red, and the Dow Jones is still down close to 400 points right now. Volatility coming down here, just green under 12%. The 10-year yields now under 1.9, so just a little bit over 1.88 right now. So yes, Jonathan, I do have to buy more VUG today. I will definitely do that. So Michael, the deal is at $95 per share. Caddy, not where the price Activision is now. So $95, that's the enterprise value. That's adjusted for the cash and debt the company has. The market cap that you see, the price that you see, is strictly the market cap. That's the shares outstanding times the stock price, right? That's the market cap. But when you adjust for cash and debt, I'm assuming that's going to be the enterprise value valued at $95 per share. That's including or being adjusted for cash and debt for the company, because I do think they have more cash on the balance sheet than debt on the balance sheet. Yes, so they do have cash of over 10.6 billion in excess versus the debt, which is under 4 billion. So when you take enterprise value, market cap plus net debt, that adjusts for cash amount over $10 billion as well. So I think that's it's being accounted for when you look at the enterprise value. So that's that. And then there was another question that I was going over. So yes, I have to buy VUG today. We'll probably do that. Let's just take a quick look on where it's trading. Every Monday, I've been buying like 5 shares of VUG. That's roughly about $1,500, $1,200 that I've been buying of VUG. And the experiment, I think I am down roughly 5 or 6%, might be 6% that I'm down on this. And I originally started buying back in September of last year. So September of last year, and since then, every week I've actually bought 5 shares. Just as an experiment to dollar cost average into this Vanguard sort of growth ETF that has mostly sort of growth oriented stocks, but at the same time it also has a lot of other companies in other sectors as well. So yeah, I do have to buy this today. Later today, I'll probably make a purchase. All right, so the market's here coming down close to 1%. The NASDAQ is. Individual stocks, talking about them. So Square still holding up. Let's just quickly go over this watch list and see what's actually moving. So, all right, let's see. All right, let's start with the greens. Upstart up close to 5%. So Upstart seeing a lot of momentum here on the day somehow. So back over 142 here. We did exit out of this whole position before the pullback, and since the breach, it's now up 42%. Upstart is such a volatile stock. It is incredible how volatile this company really is in terms of how quickly it moves up or down. So it is up now close to over 42% in the last 3 days. So Upstart definitely very green. Enphase is up close to 6%. So very, very nice move to the upside for Enphase, and I think probably a similar move up close to 40% in the last 3 days. We got SoFi, we got Mara pushing higher. We got AMC ahead of earnings, Square, Tesla. NEO's up close to 1.2%. Yes, Salesforce has earnings tomorrow. Pedro, that's right. Tattooed Chef is up over 34 basis points. Foot Locker just flat after the huge gap down. Support level that I've pointed out is going to be roughly $28, $29. They did report like okay numbers, like year over year. Yes, we saw growth in revenues, but I think it's the future with the Nike headwind is what's really affecting the stock price, and how Nike and Under Armour and all those big brands are now starting to move away from wholesalers over to their own direct-to-consumer model by selling through brick and mortar and, of course, websites as well. So that's actually hurting Foot Locker. But then again, the one unknown thing, I don't know, you guys might be more familiar with that, is how their private label brands are going to help them re-accelerate their revenue and earnings growth, right? I don't know what their private label brands are like and what they actually sell in apparel and clothing and footwear, but they did say that they are going to be working with a lot of private label brands to kind of re-accelerate that. Twilio, Shopify, flat, Palantir's flat up over 0.5%, Trulieve not really moving much, so there is again once again more red, with Southwest down over 3%, Alibaba down to $104. So it had a big breakdown for Alibaba below 110, right? So 110 we broke down, even though the buyer stepped in on Thursday, It was up from lows of $99. It actually did breach 99 bucks down to $100 actually, almost $100.02, and it jumped over 9% intraday. Pretty big rally here for Alibaba before consolidating sideways, and now of course getting rejected here at close to 110, coming back down over 3% right now. So this will turn into a resistance, unfortunately, for Alibaba. It's seen a lot of momentum to the downside since the beginning of 2021. So we'll just have to wait and see, if and when Alibaba starts to move back higher. But the valuation remains very, very low. So had any plans to buy Berkshire Hathaway Class A shares? No, not yet. Not yet at all. So Vertex down over 1.6, Teradyne's pulling back, Paysafe is down. Paysafe reports earnings sometime this week, right? So I think they're like later this week. So yeah, Wednesday before the market opens, Paysafe also reports their numbers. Oh wow, so this stock has definitely been hammered. I haven't really checked up on this in a long time. So from the same time last year, this company's down over 85%. So big drawdown here. And last earnings, they actually dropped over 41%. So pretty big sell-off. KOD, don't know what that is. So Kodiak Sciences. So yeah, they're down over 80% on February 23rd. Not sure what happened there. But wow, that is a big pullback. So Kodiak Sciences fails to meet mid to late stage study goal of eye drug. So that's the catalyst that came out on the 23rd on February, and that could be one of the reasons why we're seeing a big pullback here, basically a crash in the stock. Again, with these biotech companies, you have to be very, very careful, right? So only biotech company I ever bought was Vertex Pharmaceutical, and they were very consistent. I like the management, I like the revenue forecast, the growth, the balance sheet, whatnot. So with these biotech companies, you have to be very, very careful, right? Because one stage trials, whether they get those trials results the market's looking for, or whether they miss them, can really move the stock price very, very violently, right? So you have to be very careful. Video's bad. I don't know what's going on here. Let me just take a quick look. I mean, it should be working fine. Is it still lagging? Just let me know in the live chat if it's still lagging. How is it now? Is it better? Is it better now? All right, just a bit still. Yes, lagging so much. Works fine. Yes, lags, yeah, only. God, you guys have put up with me so much. Seriously, I mean, you guys do put up with me so much. So video is freezing, same, a little bit lag. God damn it, it's just such. Sound is fine, but not video. All right. Lagging again. What the? Why is it happening? I have no idea. I look like a robot. Let me see if this works. So, all right.
Playing from Cat's iPhone.
All right. Close live and open again. I just refreshed. I refreshed the whole stream. God, what is going on? It does say, like, it seems to be working fine. I don't know why it's showing up as, like, being faulty. I'm not losing my temper at all. It's just I want you guys to have a good experience, and right now it's just not working right now. So that's why I'm pissed for you. I'm not pissed for myself. All right, so video's improving. Fixed streaming from India. Yes, I am. I can see and hear you just fine. Okay, good. Perfect. All right, we didn't miss much action. We didn't miss much action here. So NASDAQ still down about 71 basis points. SPY is still down about 1%. Dow Jones also pulling back here. So Upstart, I was talking about, up close to 6%. But we were really going over the watch list, right? Taking a quick scan on what's moving and what's not. Let's see. Enphase very, very nicely, 164. It's kind of going back up. So I do think that, a lot of times when company report earnings and it gets sort of reacted into a really, really good and positive way, and like Enphase was up, close to over 12%, and then all the external factors can drag down the stock, right? It can really pull back here. And then you'll notice that it's now reverting back to where it was after they reported earnings, which is roughly in the 170, 175 range. So that's a good sign. The markets are starting to kind of really look at the fundamentals as opposed to just look at this macroeconomic factors or the external factors kind of bringing down on stocks. So Teladoc is running because they announced a partnership with Amazon Alexa. We covered that earlier, and that's one of the reasons why it is pushing higher. Square's up very nicely, up over 3%. Palantir, let's take a quick look, is up over 17 basis points, getting rejected at $12. That was actually the resistance we have been talking about for quite some time. It got rejected at that level on February 25th, last week pre-market. Then we had a huge sell-off. And once again, today we're struggling to actually break out over $12 for Palantir right now. PayPal, on the other hand, is down close to 1%, not really doing much. So crowd pumping. Let's take a look. So CrowdStrike up over 5%. So once again, cybersecurity stocks really pushing up. There's a few different types of stocks that are going up, and that's your cybersecurity companies, which obviously we know what's happening right now with a lot of cyber attacks also happening on different institutions and banks and whatnot. So cybersecurity companies are going to be coming up in demand by a lot. And then we've also got defense names, right? So we covered that during the beginning of the live stream. And how they're really doing well right now. Why do you think Coinbase got a downgrade? I don't think it got a downgrade. Where did you read that? So let me just see if not sure why or when it received a downgrade. See if we can find the catalyst here. So yeah, I didn't look at it. SoFi is still in a very sort of like lower high and lower low pattern, still making these, still in that downtrending channel here, consistently breaking down. And they've got earnings coming up, so that should be super interesting. Negative 16 cents per share with $250,000 in revenue. That's the expectation from the company. They report tomorrow after the bell. Tomorrow after the bell, we've got SoFi, AMC, probably two of the most popular retail names reporting numbers. And then of course, Wish.com, Bionanogenomics is another one. We've got Sea Limited, we've got Target, we've got Baidu, and we got Domino's Pizza along with Salesforce reporting. So tomorrow should be very interesting after the bell. Of course, today it's very important for Kathy Wood because she owns Zoom a lot, and Zoom's reporting after the bell. Zoom, I actually wouldn't be surprised if you do see a rally here after hours. And the reason I say that is because they are still expected to report some good numbers. $1.07 in EPS with $1.05 billion in revenue. And they have done a very good job in kind of beating estimates every single time. The last 4-5 earnings calls, like pretty much I'm going back to like 2020, they have beaten estimates the last 9 times they reported numbers. So I have no doubt, just looking at these historical earnings, no doubt that Zoom would be able to like beat numbers. But guidance I think is what's going to be very, very important. But even if you look at it from an objective standpoint based on the valuation, I mean, the stock's trading at 33 times earnings, under 10 times sales, 21 times free cash flow, and 26 times enterprise value EBITDA. So the argument that Zoom is overvalued, I don't think it's valid anymore. I think it's trading at a very reasonable valuation at 126. Now, what is the future for Zoom? That is a big question mark because it's got its work cut out for it because of all Google Hangouts and Apple links and FaceTime links and Microsoft Teams and whatnot that do offer these services for almost free, and arguably even better or worse, against Zoom. So that's the real question, right? Zoom's future and what that looks like moving forward. All right, so let's see. So do you happen to know the ticker for the 2x inverse fund for QQQS, QQQS 3x, 2x one? Let's see. I used to have that over here on under ETFs. So let's see. I don't know if TQQQ I'll be able to find that because I don't think it's going to be that heavily traded. SQQQs and TQQQs are probably like the two Fidelity's most traded tickers on there. So I might have to do some more research on that. So check the article on seeing alpha for the downgrade. I'll check that out here. But yeah, the market's starting to see a little bit of a pushback higher. I am gonna be selling some cash secured puts today. I do think I will be doing that. I'm really eyeing Intel right now. I think Intel at these prices looks very interesting, considering that it's trading at such a weekly low. If you come down over here, like it's just been, you know, bouncing off of that support very, very nicely. And on average, it's seen a nice 39-40% upside for the stock. So, and I think the insiders have been buying as well. So Pat Gelsinger and his another executive has been buying a lot of shares for Intel. They have like this past week. So I do like Intel at this valuation, right? The future is still uncertain. The future still is unknown for the company, right? AMD, Nvidia is coming in hard to kind of take away market share from this. But I do like the valuation. It's got a nice dividend, decent yield dividend of over 3%. So I do like that as well. Yes, I can do a video on dividend stocks to dollar cost average on. I think that would be a good video, kind of doing video on dividend stocks. I'll put together like a list of 4 or 5 stocks that I do believe are very, very solid opportunities for not only dividends but also capital appreciation, because I look for both, right? You want to have both. You don't just want to have dividends, but you also want to have capital appreciation over time. That way you're able to compound your returns, and as the company increases dividend payouts, that will benefit you to generate more yield to cost on your actual cost basis. Yep, so that's that. And then let's just take a quick look on the markets here. So yeah, the poll did end, and we had pretty much a breakaway sentiment, pretty much flat. The sentiment's not leaning towards one side or another. Let's take a look at InMode. So InMode has been breaking down as well. In fact, last week we came all the way down to lows of $36. $36. That was lots of buyers stepping in at those levels, and the last 2 days it's up another 18-19%. So I think the momentum is really clearly shifted to the downside here. The stock obviously is down quite a bit. At one point it was down over 63%. But again, under 40, sub 40, sub 35, closer to $30, I would consider kind of dollar cost average on that as well. Elmar, can you do a video on QYLD? So QYLD, there's not really much to do a video on. It's got a high dividend yield. It's a covered call ETF. There is a fees. There's pretty expensive fees for the managers that manage this fund. But the problem that I have with QYLD, and again, it's a great place to kind of park your cash if you want to, for the short period of time if you want to, right? Because it's got a pretty decent yield over 11.4%. But long term, the problem that I have with this is the capital appreciation, right? So overall, I mean, since 2014 to now, like in the last 8 years, it's actually lost about 22-23% in value, right? So if you're gaining, let's say 11%, that's good, that's great. You're getting 11% dividends, but you're also losing in terms of appreciation or in value, right, of that fund. So that's the only concern that I have with this, because I do like, when it comes to dividend stocks, something that can appreciate over time and at the same time pay us a dividend and increase those dividends over time as well. So those are called dividend aristocrats, is what I look for as well. So all right, let's take a look at so QQQ resistance is 344. So right now we're once again starting to break past over that level. So the 5-minute chart, we're starting to see some buyers step in again, and it's almost turning positive here, because this is where we closed last week. Then we gapped down, solid pre-market. We're seeing a nice recovery back higher over 344, 345. SPY next resistance is going to be 446. Yeah, 446 right here. This is the next resistance on the SPY. We still have a lot of work to do, especially the bulls. We're sitting at just under 3% possible upside here until we get to that resistance on the SPY. Let's take a look at AMD as well. Square is doing really well today. It's up over 4% right now. Palantir is up over 1.7. Look at AMD back up to 122. It's up over 1% here, and Nvidia is also up close to 40 basis points. Not really moving as much as AMD, but up to 242 right now. And all right, so this is an interesting catalyst. So ARM China CEO Alan Wu says IPO likely after 2025. Wow, so they're going to wait out another 3 to 4 years before they IPO. British semiconductor software design company ARM's Limited embattled China joint venture CEO. Shanghai market debut after 2025. So of course Nvidia and ARM deal is not going through anymore. So they are looking at going public on their own. So what's the plan with the cash to put for LABU? Not really. I mean, we sold out, we collected the premium, and I'm just waiting for it to get assigned if it stays under 17 bucks. Right now it is just at 16.35. So if it stays under $17, I'll get assigned. If it doesn't, if it pushes higher before March 18, then great. It'll be out of the money once again. Same thing with Palantir. If it stays under 12 bucks, then I'll just get assigned 100 shares, which is pretty close to the strike price right now, 11.65. But yeah, and that's also expiring March 18, so I'm not worried about that either. But anything under like sub 12, sub $10, sub $11 for Palantir, I think it's like a very, very low risk, high reward trade-off for the company over the long term. And think about it, the environment that we're in, when you need so much intelligent data, Palantir is once again getting overlooked in the environment that we're in right now. Cybersecurity stock is definitely doing well, but Palantir also can be seen as a company that can benefit. Unfortunately, again, this is the situation in the markets right now, right? There's the markets. Obviously, what I want to be very clear: prayers and wishes to all people in Ukraine, right? All the support there. But when you kind of just look at the markets in general, there is going to be opportunities, and there's going to be stocks that do benefit from those unfortunate events. Same thing happened with COVID, right? COVID was a very unfortunate event for the entire world. It was a tragedy for a lot of people. So many cases, so many deaths, but there was a business environment to it, right? A lot of businesses kind of benefited from what happened, and we can't ignore that, right? And we're looking at the markets in itself, and you're looking where to invest. Those things do play a big role, right? So Palantir, in my opinion, should do well, like in this environment. Of course, right now it's starting to get overlooked, but I did like what I saw in the earnings. Free cash flow was good. Earnings starting to get better, but the only concern I have is the share dilution right now. From insiders selling a lot of the shares and kind of adding to the public float. So we've got another cash to put on this. Upstart is good. Yes, Upstart is good, but I would be very careful because the valuation is incredibly high for this company. So if you're okay kind of paying that much for growth, then yes, Upstart can be a great potential play. But if you think that you're overpaying for that growth, or if you rather wait for the stock price to come down, or if you like to look for other opportunities, then sure, Upstart may not be for you. Like we've already exited out of Upstart like twice. I've had this trade twice. The first time, we had a very successful trade at 200+% return, and the second time we just recently exited completely. We made a little bit over 40% on Upstart as well. Got in right before the earnings once again. I think the same thing can be said for Zoom. I'm really tempted to actually get in on Zoom before the earnings, because I do think that they're going to report some good numbers. They're going to be able to beat estimates, beat revenues. I see Zoom as the same way as I saw Upstart last week. Again, nobody knows the future. I could be wrong. Zoom could, sell off another 15 or 20% or whatnot. But I do think that just based on looking at the risk reward here and looking at how much it's de-risked, the valuation and the growth rates, if they report some good numbers and some good guidance, we can see a very similar move in Zoom as what we saw for Upstart, last week or like a couple of weeks ago when it jumped over 35+%. So I am tempted a little bit on Zoom here, but we'll see after, what I plan on doing with this company, because we've been keeping an eye on Zoom for a long time. I've personally never invested in Zoom ever, even during this entire run up. I didn't. And of course, since October of 2020, not even February, most stocks, most growth and high multiple names, you saw them started falling in February of 2021, so same time last year. But Zoom started pulling back in October of 2020. So we'll keep a close eye on earnings and see what they have to announce. BYND. So BYND here, coming down to this sort of low end of this support level at 47. So right now trading at under $44 a share. So definitely has been selling off quite a bit. I think they did report earnings, but they missed on both revenue and earnings. They reported EPS of negative $1.27 versus 69 cents. That was the estimate. So bigger, wider loss. And then revenue came in at just under $101 million, and the expectations were over $101 million. So, yeah, I mean, the market doesn't want to see that. The market doesn't want to see revenue earnings miss and, non-profitable companies right now. That's not the market environment that's going to benefit some of these companies. So, unfortunately, it is hitting a new 52-week low. Caddy, please remember to research maybe a huge one episode on cybersecurity. You promise. Yes, I'll do some analysis on cybersecurity stocks. I do have a video on CrowdStrike that I've already done, but I will do like an updated video on that company, on Zscaler, on Okta, some of those cybersecurity names that we'll do like a video on. Yesterday I did like a pick one video on fintech, and then moving forward I'll do like one on cybersecurity as well. Fortinet is just up over 2.5%. So all cybersecurity is pushing higher here. So Victor, at what price am I willing to buy Vertex again? I would say like sub 200. It has to come down sub 200 again for me to be very, very interested in this company. Right now it's selling off over 1.75%. I have drastically trimmed my position in Vertex. Of course, if you're part of our Discord and our Patreon, you guys know exactly where we were buying in the 170s and 180s. But so far we have kind of trimmed. I personally have quite a bit to raise more capital and kind of take some profits off the table. And if it does continue to sell off sub 200 again, then yes, I would love to dollar cost average once again in this company. So awesome! I will do analysis on cybersecurity companies and do a video on CrowdStrike and whatnot. So let's take a look at the markets here. We've got the Nasdaq. We actually almost turned positive. So we had rallied over 79 basis points. We were only down about 20 basis points on the QQQs. We had almost turned positive here. So right now we're back under $340. So you'll notice that even last week we saw a lot of back and forth. This is really where the bears and the bulls kind of come together, and you'll notice kind of like a symmetrical triangle. That's indecision in the markets, right? This is the definition of a lot of indecision. 344 for the QQQs. The bears are putting a lot of pressure here from the upside, and of course we've got the bulls coming in, putting in higher lows, and eventually we did result to the upside here, right? We eventually broke out for QQQs last week, so this was the breakout, and once again you'll notice that we're seeing a lot of consolidation here in that area at $344. So School says, thank you, Caddy. I took Vertex trade with you and made good money. Thanks. That's great. Congratulations. I'm super happy, super excited for you. But yeah, QQQ 344. That's the level to watch today. And again, we'll keep a close eye on if we continue to kind of form these symmetrical triangles, eventually see a breakout or a breakdown to the downside. What do you guys think? What does everybody think right now? Which side are we going to resolve to? And this is the same for SPY. Nothing crazy. I think 446 is still a level that we really need to keep a close eye on. All right, so let's see. So XAR, which is that sector? So Aerospace and Defense ETF just turned positive on the year after today. So that's this sort of blue, sort of very, very weird looking green and blue XAR, up over 2.3%, and ITA is another aerospace and defense ETF. It's up over 5.6%. So very, very clear move in the markets where we're seeing aerospace, defense stocks, commodities and metals and energy pushing higher. So that's the trade so far in 2022. And all the other sectors continue to stay down, as we've already discussed in our previous videos. These are all these companies that remain down here on a year-to-date basis. So I've not done a breakdown on TSM. I'll probably do a breakdown on TSM, but again, it's weird because when I do these fundamental analysis videos, maybe, so again, I want to hear from you guys too. Like, I think it's good for me to get some feedback, but what I've heard is the videos are too long. Like if I make 30-minute like due diligence videos going over the fundamentals, like revenue growth, earnings, evaluations, the cash flows, I feel like it gets too boring. I feel like it gets really boring and it loses engagement, and as a result, YouTube doesn't push that content out. So I'm trying to figure something else out, and what's gonna work, because yes, I honestly do want to do a lot of research. I want to provide these long sort of educational videos and of course research videos for you guys, but you know, it's kind of like finding the right balance. You know what I mean? It's difficult for me. So we'll see. I mean, I definitely want to provide more updates. Yes, Mara and Coin are going side by side. So let's take a look at Coinbase. So it's up close to 1.7%, so very, very nicely under 180 right now. And I think Mara is up over 6%, close to 6%. So, all right, so it's beneficial for us. That's good to know. Thank you. Do you think it's a good strategy just buy SPY ETF and hold for the long-term safe trade? I do think that yes, historically it's worked, and it's a great strategy to have some exposure to the general S&P 500 Vanguard sort of ETF. But I also want to sort of reiterate on the risk that just because it's worked out in the past doesn't mean it's going to work out in the future. Yes, it's worked perfectly well over the last 150 years, right? For the S&P, for the NASDAQ. We've seen a consistent rally. We've seen higher highs and higher lows. And for most people, that is encouraged, right? To have either everything in the S&P 500 index fund or a pretty much predominant exposure to the S&P 500 index fund, right? Even Warren Buffett says that to this day, that never bet against America. S&P 500 index funds, low-cost index funds is the best way to do it. But we're entering into a different sort of environment, right? This strategy and this sort of philosophy worked a lot over the last 150 years. But we're in an environment where a lot of things have never happened before, right? The U.S. debt that we talk about, right? There are the interest rates, the inflation that we talk about. There's a lot of things that are at risk for the general market ETFs as well. And they're not perfect either, right? There's over 500 companies in that ETF, and bulk of those gains are coming in from the top 10, top 25 stocks. So there's certainly a way to get exposure to other companies as well, dividend paying companies, high dividend, high income cash flow companies. And if you want to kind of do some more research and do some more analysis, you can certainly find those companies. But S&P 500 ETF has worked out in the past. Doesn't necessarily mean it's going to work out again, but it's got a high probability of working in the future. So that is definitely a strategy to consider if you want to add some exposure to that. All right, so perfect. I like your videos. Watch technical analysis on these stocks. I like the videos. Okay, perfect. So I will keep doing the detailed analysis videos. So again, yeah, I'll just keep doing it since you guys enjoy this so much. So thank you. I appreciate that. And I'll probably do like TSM as well. Michael, I will leave a couple of long comments. You don't have to do that. You really don't have to do that. As long as you guys watch it, that really, and helps it. If it helps you guys out, that's all I really want, right? If that's the whole point. Is the analysis should help people, right? It should be helping you do some more research or kind of due diligence on those companies and make a decision that you can. So that's the bottom line for why I'm doing it. So, all right. So NASDAQ pulling back a little bit now intraday. So getting a bit of a rejection at that 344 level as we talked about, and selling off even further down. And the markets overall, so we got AMD now red, Nvidia is now red, we've got Palantir now red, and then Block slightly up over 1.5%. So a lot of stocks are now starting to turn red here intraday. Upstart's now up over 7%, up to 146. Yes, I can take a look at DocuSign as well. interesting to hear my thoughts. So yeah, I'll take a look at DocuSign too. All right, guys, so I'm probably going to call it there. Once again, thank you so much for joining. I really appreciate it. Again, we'll continue to kind of share more research and more analysis and downloadable PDFs and Excel files and whatnot over at the Patreons if you guys want to get access to all that. And of course, get access to buy and sell alerts, the options alerts, the market updates. By the way, you know what? Wait till tomorrow if you want to join, if you want to really be a part of our money investing community. Tomorrow is the first of the month, and that's usually the best time to join. So NEO pushing higher very nicely, 21%. Marathon's up, but overall the markets are still choppy right now with a little bit of a pullback here. And we'll continue to kind of hear more about what developments we get out of the talks that are going on between Ukraine and Russia. And then later this week, we've got Jerome Powell speaking, James Bullard speaking, we got the Beige Book, we got the OPEC crude oil inventories. So there's a lot to look forward to from an economic standpoint as well. So thanks again, you guys, for watching. Okay, so DigitalOcean, not DocuSign. Okay, I'll do that. DigitalOcean. But again, thank you so much for joining, guys. I really, really appreciate it. Make sure that you drop a like and of course subscribe if you're new to the channel, and make sure that you do check out the links down in the description below with all the links for our money investing Discord if you want to be a part of that. So once again, I hope you guys have a great green day, and I will see you guys